Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories on Midcap Radar. Stocks ease back after a strong open ahead of the Fed Chair Jerome Powell's address later today. Realty metals lead the charge, while consumer durables and IT slip. Midcaps outperform.
The Kirit Parikh panel bats for liberalization of the gas sector by 2027, and then, until then, a reduction in the price with annual escalations for gas from existing fields. The recommendations are seen as a positive for gas players.
The Inox Group cuts debt across businesses. Inox Green repays 250 crores. Inox Wind repays 161 crore. The group also says that further debt reduction is underway in both companies.
Big block deal in Zomato, 3.4% equity changes hands at an average price of 64 rupees, with Alibaba likely to have sold part of its stake in the company.
Gland Pharma enters into an agreement to acquire CDMO player Sensex Group for 120 million euros. The company says that there is no communication over parent Fosun's possible stake sale in the company.
All right, those are the top headlines that we are tracking at this point in time. The big story, of course, is Kirit Parikh recommendation on gas pricing. We'll discuss that in greater detail through the course of the show. For now, the markets are as steady as they go. Nifty is up 52 points. It has surged a little bit from the lows. And we have the Midcap index, which is outperforming in how at the day's high with gains of 0.6%. So it's a 200-point uptick on the Midcap index, with Bank Nifty declining today in trade. But Reema, we do have some global cues. We have that speech from the Fed governor. We have the GDP data today. So a lot about macros as well.
Absolutely. And ahead of that, things have gone a bit quiet. Let's talk about individual stocks in the mid-cap and the small-cap universe. This is our segment, Mid-Cap Movers. Vivek is joining us to tell us the mid-caps that are moving around. Vivek.
Well, good afternoon. Quite a few stocks on our radar today as well. And today, what we're doing is we are focusing especially on the realty space, because quite a few stocks in this particular space are moving with good volumes as well. So Puravankara, today up on very strong volumes, Godrej Properties, DLF. And also, one thing to keep in mind is the fact that some of the real estate companies with exposure as far as the Mumbai market and Maharashtra market are outperforming in today's trading session, moving quite significantly. So Kolte Patil, Oberoi Realty, as well as DB Realty are some of the stocks that are actually seeing quite a sharp up move. Moving on, what we're seeing as far as some of the stocks that are breaching the volume buzzers or the volume limit, we are seeing Hutco, up almost 12% today on very, very strong volumes. MSTC, even a couple of days back, this particular stock was purchased at the upper circuit. We had highlighted how this particular name is seen as a derivative beneficiary of the scrappage policy. And in the hospitality space too, today some very strong action seen in Lemon Tree Hotels as well as Taj GVK. On the other hand, when you're talking about some of the stocks that are losing, a lot of the railway space stocks, have seen a very, very sharp up move in the last month and a half. Today, a lot of them are seeing profit bookings. So IRFC, RVNL, IRCON, and RailTel, all of these stocks are seeing some profit booking at higher levels.
They are. Okay, Vivek, thanks a lot for joining us with all those stocks that are in focus. It's time to get a technical check on the markets. Jay Thakkar, VP and HUR at Marwari Shares and Finance is joining us now. Jay, good afternoon. Thanks a lot for joining us. Well, what are the charts suggesting now? Any more up move expected from here?
A very good afternoon to you, Reema and Sonal. And I would say that as far as the index is concerned, Nifty especially has been able to hold on to its crucial level of 18,600 in today's trading session. In fact, tomorrow being a weekly expiry, the first weekly expiry of December, I would say that 18,600 from here on would definitely be a level to watch out for. And if Nifty managed to close above these levels in today's trading session, then yes, it's inching towards the levels of 18,750, 18,800. The Bank Nifty is not able to sustain above the levels of 43,000. It's been just hovering around those levels, 100 or 200 points plus and minus. But then Bank Nifty, if it managed to close above the levels of 43,000, and 43,200 would be the next target thereafter, and 43,500 would be the final target for this weekly expiry if it managed to close above 43,000 levels. Because there's the space where we are seeing some profit booking or some weakness or some selling pressure at the higher levels. But Nifty on the other side, out there, apart from banks, the other sectors are really helping out Nifty to perform. Maybe the FMCG pack or maybe the big boy Reliance. That's two participating since couple of trading sessions with an increase in volumes. So overall, Nifty is looking much better, or overall the strength out there is better comparatively or relatively to Bank Nifty as of now. As far as mid and small cap indices are concerned, I would say that mid cap has been consolidating within a range of 32,500, 30,000. I mean, that's the 2,500 points range. And whenever we see a breakout above this range, I would say that it could further see a rally of around 8 to 10% thereafter. So Nifty mid cap and small cap really needs to come out of this range to show that real momentum on the upside. But then the stocks are well in the momentum. I've got two buy recommendations from the mid cap, and the first buy is on Supreme Industries. It's trading around the levels of 24.36 right now. One can buy this, targeting 28.50, and one can place a stop loss at 22.50. So there's a good risk reward out here, 1:2. I mean, the stock has provided a nice breakout from an inverse head and shoulders pattern with a good volumes as well as buy crossover in the short to medium term indicators. As far as second stock is concerned, I've got a buy recommendation on Indoco. Now, this stock has provided a nice breakout from a sideways consolidation. I mean, the stock has seen a good correction from 520 levels to 310, and I think that the overall correction has got complete with this kind of a breakout, and the momentum has also reversed quite well. So I'm targeting around the levels of 470 out here. One can buy this Indoco with a stop loss of 370.
Thank you very much for joining in. By the way, markets are up for the 7th day in a row. So despite hitting all-time high levels, the markets are not giving up those levels. And today as well, buying has come through in the last 1 hour. Get into a break on that note. On the other side, Feroz Aziz, Deputy CEO, and Anand Rathi Wealth will be joining.
Still tuned into Midcap Radar on CNBC-TV18. Let's get some conversations going now. Anand Rathi Wealth is the stock on our radar. Company reported a good set of Q2 earnings as revenue and profit rose, while company also recorded growth in new client additions. To discuss how the quarter has gone by and how is the business looking like right now in terms of momentum, we are now joined by Feroz Aziz, who's the Deputy CEO at Anand Rathi Wealth. Feroz, good afternoon. Thanks a lot for joining us. Pleasure speaking with you. Well, good set of numbers in Q2. What's the outlook now as far as the AUM is concerned? 15% growth on a YY basis in AUM last quarter. This was when markets were wobbly. Now we are sitting at record highs. Can you tell us what kind of AUM growth are you expecting, and also kind of client additions, because that is something as well that will aid to these numbers?
Sonal, you're absolutely right. In a wealth management business, these are lead indicators of how the business will do. If your assets grow at a reasonable pace, your revenues will, and in turn your profits will. And your assets grow because of two important things. One is the movement in the portfolios of the clients. If the clients' portfolios grow 12-14% every year, that's God's gift to us in terms of AUM growth. Then on top of it, if you are able to grow at 10-15%, and that's the long-term guidance we've given. So will we meet that number? Hopefully, yes. And like you rightly pointed out, the first 6 months were not the greatest of the 6 months for this financial year. In spite of that, client gave us 2,500 crores new from external sources, be it from other competitors or fresh savings. So 2,500 crores is compared to the same period last year was 1,200 crores. So in bad times, when clients trust you more, it gives you a satisfaction that we are actually managing risk. And that's when you look prettier on a relative basis. So that's one. Client addition, like you said, from same period last year, we added about 570. This year, first half year, we added about 850 of them. So because clients are able to realize the merit of dealing with us during bad times, more so in good times. In good times, everything looks good. So it becomes very difficult to distinguish between the boys and men, if I have to call it that way.
So in the past, you've said that your AUM growth has 4 legs to it, right? One is the market value of existing growth. Secondly is your existing clients give you a lot more business. They consolidate their holding. Third is new clients, which has been very strong. 2,500 crore is the number you've shared. And fourth is, I think, when you add more relationship managers, and the number there is 850, right?
Rima, this is a great question. I'm glad that you read out these 4. We've been speaking of these 4 mutually exclusive engines of growth. To say the number of RMs today we have is 271. 850 was the number of clients we added in the first 6 months. 271 are the current relationship managers, if we have to call them that, wealth managers, private bankers. That's the strength. But as we speak, we are training about 270 of them, which is called the AM fraternity, which are sharp analytical minds hired from B schools, rank holders, CAs, and stuff whom we train internally. Over a period, we promote 30, 40, 50 of them every year, depending on their credibility to actually take up that role and live up to the brand promise which we have given to our prospective clients. So yes, these are the 4 legs of growth. The market movement or the portfolio growth in the first 6 months didn't contribute because 30th September, the market was not at its peak. It was significantly lower than where we are today from 18,700. I think it was somewhere around 17,000. So that has not contributed. The other 3 legs have contributed for the first 6 months. And going forward, we expect all the 4 legs to contribute. And they are not, they are negatively correlated sometimes. So it brings in certain degree of stability to AUM growth and in turn revenues.
So this business from new clients at 2,500 crore, is it a record high for you? And in the first 2 months, could you tell us what the number stands at?
So Rima, yes, it has been a record high. Client addition has been a record high. New monies coming from new clients and old clients, which is what is jumbled into that 2,500 crores, is also a record high. These 2 months have been good. I don't know whether I'm supposed to be sharing all the numbers because we've not finished the quarter. They've been very good, and we maintain our guidance for the year, and the guidance is conservative to our mind. We've not revised it upwards. But the long-term guidance, which is what our confidence comes from, the 20 to 25% growth in revenues and profit after tax for long periods, if not few years, but for a few decades is possible in this business, because God is extra kind to you, because he gives you a 10-12% just by the virtue of time. Since our last 10 years, our client performance has been 12-13%, that comes to you for free with time. And you have to just worry about the next 12-15% growth to grow above 25%.
Feroz, when we are talking about a lot of stuff which is happening well, one of the metrics to look at in terms of wealth business is also the fact that you have to look at profit per relationship manager. What is that for you? Because the last number that I checked, it's still lower than the industry. Can you give us what that ratio is right now? Your number of relationship managers, as you said, at 271. Will you plan on adding more to this number?
Yes, Sonal, you're absolutely right. One very important matrix, again, a great question, Sonal, is profit per relationship manager. To my mind, because it's a very diverse group, I have 20-25 relationship managers who have finished 10-11 years in the system. They're also new ones. So I basically, as a company, stratify them into time periods. So profit per relationship manager this year, if I look at 155, 160 crores of PAT divided by 271, it comes to 60-70 lakhs per relationship manager. But as the vintage grows, because our attrition levels are decimal, our regret attrition is in decimal 0.74, if I remember the number right, for the second quarter of this year, we don't lose RMs because, and that's when a satisfied client can be there, because if a client RM attrition is a very big problem in the industry. We have been able to solve that with vintage. The RM profitability shoots up as a hockey stick, kind of an inflection point, especially after 4-5 years of an RM staying in the system. So to answer your question, Sonal, per RM today, if I divide the PAT this year guided by the number of RMs, it's 60-70 lakhs, somewhere thereabouts. But that's got a large dispersion with vintage.
Okay, just one final question then. What would your market share be in the private wealth management space, and how has that number changed in the last 1 year? And secondly, I remember Anand Rathi, who is the founder and chairman of your group, he had said 6 months ago that the company is open to acquisitions. The last big one was Reliance, which you all did about 4.5 years ago. Have you made progress on the inorganic front? Have you identified any acquisitions?
So, Rima, what happens is acquisition, like you said, requires, one is the capital, which thankfully and the profits are adding up and the reserves become higher. The other is the cultural fit. We come from a mindset that culture is very critical. So acquisition from an inorganic standpoint becomes difficult, not just on numbers, but the team has to fit into the culture and our thought process, because we are very client-centric. We only give to our clients what we buy for ourselves. But in wealth management, there are 21 different kinds of product lines, and people like to sell all of them. So to answer your point question, we've not progressed too much. From a capital adequacy to do an inorganic growth, we have done very well. We're trying to see if there are some which can have a cultural fit, and that's where a couple of deals fall through on the last leg. of a fitment perspective.
Okay, Feroz, it was a pleasure speaking with you. Thank you so much for joining us, telling us what plans are in place and the outlook going forward as well. That's Anand Rathi Wealth Management, the stock up 0.5% as we speak. With that, we'll slip into a break now. On the other side, we'll tell you all about the impact of the Kirit Parikh panel recommendations on oil and gas stocks. Stay tuned.
Welcome back. The Kirit Parikh panel bats for liberalization of the gas sector by 2027. Until then, a reduction in the price with an annual escalation for gas from the existing fields. The recommendations are seen as a positive for gas players. Sonal, explain the impact.
Yes, it is a big positive. So first of all, he has spoken about a ban for these companies which are basically selling the administered priced mechanism gas. It has recommended a band of $4 to $6.50 per MMBTU in terms of gas pricing. The ceiling, which is $6.50 per MMBTU. Now remember, the current APM gas price is priced around $8 per MMBTU. So the ceiling that they think should be set is $6.50 per MMBTU, which will gradually be raised by $0.5 every year. So they are keeping a price hike clause in place as well. They are also talking about liberalization of APM gas that is starting 1st Jan of 2027. That means it will be market determined, no formula in place. And for the difficult fields, it is expecting or talking about liberalization from 1st Jan of 2026. New fields, they will continue to enjoy market freedom as they do, as per the conversation we had with Mr. Kirit Parikh. Now, what is the impact? So there is almost a $2 per MMBTU decline in gas costs according to this particular panel report, and that means it is an implication of 7.5 to 8 rupees per kg in terms of CNG pricing, and it is positive for domestic PNG as well. 87% of overall volumes for IGL come from the domestic and CNG segment, 80% for MGL, and that's why these two stocks are higher. Gujarat Gas absolutely flat. That is because it derives around 33% volumes from the priority segment, 36% so to say. Now retail prices on the back of this from CNG and domestic segment can be cut. For CNG by 7.5 to 8 rupees per kg, for PNG by 4.5 to 5 rupees per SCM. They can go ahead and do that, cut prices, it will improve their volumes. If they don't cut prices, it will improve their margins. So in both the situations, it is positive for city gas distribution companies. The second thing that has happened is there is no change in pricing for new fields. So which are the companies investing in new fields? It's the like of Reliance Industries and ONGC. Since there is still market determination as far as pricing is concerned, it is positive for both these stocks as well.
Thank you very much for explaining that so beautifully. Let's move on now. NCLT has approved Sterling Biotech's acquisition by US-based Perfect Day under the Insolvency and Bankruptcy Code. My colleague Ikta caught up with Ryan Pandya, co-founder and CEO of Perfect Day, to know more about this acquisition.
We're acquiring it as a going concern, but it's a clean slate. So as we step into the business, we have nowhere to go but up. And we're excited to be able to not only support what they're doing today, but in fact invest even more. I think we're immediately deploying about 1.5 times the actual bid amount into additional investments in the business, purely to be able to expand what they're doing and be able to accelerate our path to market.
Okay, anything to be paid separately to, say, the operational creditors?
No.
Okay. How is this entire acquisition being funded? 638 crores in terms of reserve price, or rather the total acquisition amount. And separately, you said that you have investments which you're looking at for Sterling Biotech as well. Where is all this money coming from?
Yeah, so Perfect Day has been lucky to be backed by extremely patient long-term investors of the likes of Horizons Ventures, Temasek, the Canadian Pension Plan Investment Board, CBPIB. These investors have been with us for years and understand that what we're building here is really looking forward to the future of what the world needs and what the world wants in terms of nutrition, in terms of sustainability, in terms of creating new markets. And it does take money. And so we've been lucky to raise about $750 million till date. And it is primarily this balance sheet of Perfect Day that we're using to invest in the business.
Okay, just coming back to Sterling Biotech before we get to the business part of it, will the existing equity be written down to zero, and will you be holding around, or Perfect Day be holding around 100% in the company?
Perfect Day, as well as our investors, we have some folks within India that are joining on, and that's important to us because we view our goal here as being collaborative with the Indian market. In fact, we'll have some updates coming in the next few weeks that we'd love to share with you. We did obtain FSSAI approval to be able to sell our Perfect Day ingredients even in India, And we're excited to share some partnerships that we've been forging with Indian companies.
Well, with that, it's a wrap on Midcap Radar. Thank you for watching. Your stocks when we return.